Over the past fortnight, crude oil prices have dropped by 10%. A major part of the decline has come in the past week or 10 days. In this episode, we will examine how crude oil prices will likely behave in the short term. Namaste. Crude oil has begun to give up its gains. This is because traders and investors are optimistic about a US-Iran deal over the opening of the Strait of Hormuz. A joint statement issued by Iran and Oman is under review and in the final drafting stage. The proposed route is expected to remain operational for 2 to 4 months. Tehran says that the agreement does not amount to a full reopening of the strategic waterway. Research agency BMI, a unit of Fitch Solutions, has raised its price outlook for benchmark Brent crude to $86 a barrel from its previous estimate of $84 a barrel. With the energy market swinging wildly, it expects the market to be volatile in August and September. ING think the economic and financial analysis wing of the Dutch multinational financial services firm ING says there is a wide gap between the US and Iran in managing the Strait of Hormuz and the nuclear issue. Therefore, there is a real risk that any deal could run into problems due to mistrust on both sides. The International Energy Agency IEA says the global oil market balance is set to swing back into surplus towards the end of the year. The forecast hinges on the assumption that tanker flows through the Strait of Hormuz will gradually recover. This will allow producers to restart fields and refiners in West Asia and elsewhere to resume product shipments. The U.S. Energy Information Administration EIA has said expectations of increasing oil supply and moderating inventory draws have caused oil prices to fall. It has forecast the Brent crude to average $74 a barrel in the current quarter. We expect ongoing oil inventory accumulation over the next year will continue to put downward pressure on crude oil prices, with Brent falling to an average of $65 a barrel in 2027, it said. At the time of the recording of this video, Brent crude was rolling near $80 a barrel. The UK-based Light Finance expects the market to be volatile. Crude oil prices are likely to be driven by several key factors. They include geopolitical tensions, the US-Iran conflict, potential disruptions to West Asian oil supplies, and the possibility of a tighter monetary policy from the US Federal Reserve. It expects prices to average at $87.33 a barrel this month. That's all for now, viewers. Thank you all for tuning in. Until we meet in our next episode, this is Subramani Mankumbu signing off. Good luck.